Today was an extremely frustrating day, so let's talk about it. First, before we get into the stocks, let's look at market sentiment. Okay, remember we were in extreme fear and it looked like we were climbing out of it, right? It looks like we're going right back into that extreme fear territory. And what does that mean? That means the market is going to be extremely volatile. Okay, so let's look at the scoreboards. So your first time here, scoreboards are the three major indexes: the S&P 500, the Nasdaq, and the Dow. Now all three were down today. Nasdaq took the biggest hit, down almost 1% today. S&P 500 down a little more than 0.5%, and Dow was down 0.7% today. So when the market opened, it looked like that we were going to have a rather nice day. And I wanted to speak to two stocks specifically. First stock we'll talk about first is Netflix. Everybody knows Netflix, right? So let's talk about Netflix. So they reported and they missed, I believe, the revenue, met expectations, slightly beat, but the earnings, they were below expectation, and a lot of it was from this one-time charge. I believe it was Brazil tax. It's something that they've been going on with for a while, and it sounds like it's been resolved just for the one quarter, and going forward, everything should be good. We were looking for the engagement to be good. We were looking for their solution and their strategy as far as AI. And there was one other metric we were looking for. I can't remember off the top of my head. But pretty much all three of those metrics, I believe during the earnings call, they gave pretty strong answers. They had really strong quarters. They have good content. I think it was Demon Slayers Hunter, that big popular K-pop movie. I haven't had a chance to watch it. I don't have any kids, so I didn't watch it. But that was very well. They had the boxing fight, and leading into the next quarter, we're going to have NFL games for Christmas. I believe another live event is expected. New content, some there's going to be new content, and some like Stranger Things. I believe it's the last season of that will be rolling out, and I believe Wednesday will be coming as well. New movies. I believe there's another Knives Up movie. So if you get a chance to watch the earnings call, just definitely watch the earnings call. But let's talk about the stock. Yep, that's right. It was down 10% today, even after that pretty decent quarter. Now we had last quarter, they really surprised and blew expectations out the water. And so we had that nice move in Netflix shares. And I believe a lot of investors were probably thinking the same thing was going to happen in this quarter as well. They were going to blow out on revenue and earnings as well, and that wasn't the case. But if you take off that one-time charge from the Brazilian tax, they actually did really well this quarter. The one thing about earnings, and the title of this episode is earnings season equals funny season. So sometimes you can get really nice results, but your stock performance after the earnings report is the exact opposite. And we'll really talk about a company that we were really expecting to do well, because the shares were up 9% pre-market after earnings, but actually closed lower. And so we get into that in just a second. But yes, Netflix shares were down 10% today after that earnings call. I remember our price target was 1150, so it fell well below that. Today's low was 1112. For the long haul, I still think you don't, at least for me personally, I'm a long-term investor. When I'm investing in a company, a long-term portfolio, I'm not holding it and get rid of it because it had a bad quarter. Now, fundamentally, things changed and that growth story or whatever the reason why I initially bought the company changed, well, then, yeah, after that one quarter, then, yeah, we can say, all right, let's get out of this before we get in too deep. But in this case, it was just a decent quarter, actually a pretty good quarter, but you just didn't get the response that you wanted in the share price, at least not initially after earnings. Okay? We're long-term investors. Netflix is still a leader in streaming, still a leader in producing great IP. Nothing's going to change, at least for the foreseeable future that I forecast and I see. So if you're not in Netflix, this might be an opportunity to really get in. Remember that price tag we were looking for is 1150. It's below that 1150. Maybe it's a great time for you to jump in if you don't have any shares whatsoever. I actually kind of sniffed this out this morning. My cost basis is for Netflix. I initially bought the shares below $1,000. I added just a small amount the past month or so once it hit 1150 or below, and I was going to hold those shares. But it was just something about the market. Just overall, I was like, I'm not feeling very confident about this. So I actually got rid of those shares before the earnings report this morning, and I'm actually like patting myself on the back. Grand scheme of things, it wouldn't have been a big loss. I was still would have been up overall. I want to say maybe those shares are up. Well, maybe now about 20%, maybe even a little bit less than 20% overall. But I saved myself a little bit of change. Was able to buy a couple other things by selling this morning, and then watching that 10% decline. I felt pretty good making that decision ahead of time. Definitely wasn't going to sell out of the whole thing. If it really got beat up, probably was going to add on to it. But glad we did sell a little bit of those additional shares that we did get into. All right, second company I want to talk to you about is Vertiv, and I've been talking about Vertiv lately because it's been doing pretty darn good. Now, these shares we've had over a year. I believe our cost basis in at least one of our smaller portfolios is $75. So this stock is well up over 100% for us. It's done really well for us. Put a post in this morning. One of our All in Society members, Ant, is actually, I was talking to him on Instagram, bouncing back and forth. I think I was trading NVIDIA, and I think he mentioned Vertiv, and he said, hey, if you like NVIDIA, you should look into Vertiv because they are a partner to NVIDIA and the data center build out the liquid cooling for their chips. And so, oh, by the way, if you want to hear from the CEO, he was on Mad Money today with Jim Cramer. So definitely check that out if you get a chance to. But they crushed earnings. They beat on revenue. They beat on earnings. They raised their guidance for this year, and it was just an absolutely remarkable quarter. Look, today the shares are down almost 2%. Pre-market, these shares peaked at 194, I believe, pre-market. I think we should be able to see it from here. Here we go. It should allow me to click it. There we go. Yeah, 190. I want to say I saw 194 this morning. I definitely saw it was up 9%. All pre-market, and then crashed down and actually closed down 2%. Absolutely blew my mind. I was licking my chops. I posted in a Patreon this morning. Make sure you join the Patreon and join for free, or you can join for $10 per month and you get our trades in real time. See exactly what we're investing in, the exact moment that we push buy or sell. And I put a post in this morning. I was like, Vertiv stock's up 9%. Here we go. Yes, I even put, all right, we're one for one of our earnings. Netflix didn't do that hot, but Vertiv, they blew earnings out of the park. Our shares are probably going to be up 10% by the end of the day. Yep, down 2%. But when the stock ran up so crazy ahead of earnings, everything was kind of like already baked in. So it was kind of like it runs up and then you get people taking profit. And probably when the market opened, they saw that profit taking from the new high that it hit pre-market. And then there was more selling. Obviously, the entire market was down today. There was selling galore. We did pull back off of those the lows of the day, which was awesome to see. But this stock got down to $162.68 when it hit 190 in the pre-market after a blowout quarter. Now, this stock is very volatile. I played options on it. I got my butt kicked just to see the shares go up like crazy after I closed out on the contract. So I'm not playing around with this company. I hold it long term. When it does hit highs, I typically nibble off of it. But trading here, I think data center rollout is just going to continue probably in the next couple of years or so. They have a lot of business backlogged, and so this is a company that you want to put in your portfolio. Again, if you don't have any Vertiv, if you are an NVIDIA investor, it's almost a no-brainer to get Vertiv. Make sure you research this company, understand what you're investing, and understand that it is very volatile stock. Now, if we have a quarter where they don't do well, this stock is going to sell off extremely hard. I guarantee that. So just be mindful. It's a very volatile stock. It moves quite a bit, but just stick in through it. It was very rough. This chart doesn't even tell how. Let's try it if I can get a 1 year chart. Yeah, the chart doesn't even do it justice. It was up to $150, right? And then we got the DeepSeek that dropped it down to 102, and it just slowly declined to $59. $59. It took me everything not to sell this stock. But I held in tight because I believed my research. I believed in the fundamentals. The story did not change. It was just a DeepSeek story. And then we had the tariffs on top of that, Liberation Day or whatever Trump decided to call it back then. And it just crushed the entire market, especially this stock. But it's been flying high since April. Like I said, those lows are $59. Now we're at $171. So this is the power of just holding your plays long term, having conviction in your research, understand why you bought the company in the first place, having your thesis, and you're sticking through the ups and downs of the market. So I just want to highlight those two companies. While we're talking about individual stocks, I did want to highlight, if it's your first time here, so we have a basket of companies that are our major plays, which means we have $10,000 or more invested in it. Those companies are called the All-In Collective. And this morning, by selling shares of Netflix, I actually knocked Netflix down into our non-core plays. Okay, so now we have 6 core plays, and it goes from most invested in to least amount invested in with Uber, but everything has at least $10,000 in value right now. So it goes Meta, NVIDIA, Apple, Vertiv, Amazon, and Uber. Meta and Amazon have been getting beat up as of late. Meta is up actually 25% for the year, but Amazon, I think it actually be down for the year. Yeah, down 0.66%. Is Apple's probably down for the year now too? No, it's up actually 3% now after that run it's had the past week. But these are definitely our hitters. We love NVIDIA. We actually got into a NVIDIA option call today. It's up a little bit. It's a short-term play. I'm really just with NVIDIA, I'm just kind of playing this range. NVIDIA's sitting around 180 to 185. It hits that 185. The sellers say, no, I'm knocking you back down. And we're just kind of playing this game. So with that being said, I'm just been watching NVIDIA. I'm saying I'm not going to watch this play in my face anymore. I'm going to participate, and I'm holding on to this. If we get to that 185 range before earnings, I'll probably take my profits and just see what NVIDIA does during earnings. We already have a couple of longer options in these on NVIDIA, and those contracts, we ate off of those as well. And they're actually, if not down, they're right at the price that we got them in a couple of months ago. So now would be a great time for you to jump in the Patreon. It's only $10 per month. $10, you can see all of the contracts that I'm currently in right now. And then, of course, you get any moves that I make in real time, and then any research that I put on here outside of the videos that we post daily during the trading weeks, you can get that information as well. We have a fundamental investing playbook. So all of my strategies, how I look at individual companies, we break them down. We look at key ratios, and we can determine whether something is fairly valued, it's overvalued, or it's it's at a extremely discounted price, and it's time for us to go all in. This is all in society for a reason. Now, of course, we're not going all in. We're going to be smart about this. We're going to allocate a responsible amount of money towards each trade. We're never going to just put our whole contract into one trade. But all of those strategies, everything you need to trade and win long term in the market, is going to be in that Patreon for only $10 a month. So make sure you join that. We just recently got into Uber. Uber shares $100 plus easy within the 6 months. Unless something happens in Q3 or Q4 that makes us scratch our head, and business and management and the business isn't humming as we expect it to. But it's a free cash flow machine. It sounds like they're entering new partnerships, entering new markets. Every month or every week, seems like we're hearing something new from Uber. Tesla reported today, and let's see how those shares responded. Okay, down 4% after the earnings call. Is actually not that bad for a company I don't understand why people are investing in the first place. Elon's been saying he's going to do this and do that, and he didn't roll out or implement any of those things that he's done. A lot of people are just betting on his genius. I was watching actually the halftime report on CNBC today. I can't remember his first name, but his last name, his first name is Joe. The analyst is on there a lot. I respect a lot of the things that he says. But today, this is a man who manages folks' money. He literally on there today said he's investing in Tesla, which is in this fund that he manages. And he literally said on television, "I don't know why I'm invested in this company." So there's people on television getting paid to speak and give you knowledge and manage other people's money. And he actually had the balls to go on television and say, "I actually have no idea why I'm invested in this company." It made no sense. It blew my mind. But that's the type of market we're in. A lot of people are just throwing money at stocks just because it has a lot of momentum. The fundamentals behind this company, they make no sense. This is a car company, but it's trading like it's a tech company. Yeah, in the future that might roll out, but why would you be willing to pay up for something that, in a grand scheme of things, this is just another General Motors right now. Now, eventually, they have the resources to roll out these robots and the robo taxi and whatever else ambitions Elon has. But for me, I do have some speculative stocks, but this stock is more than speculative. This is just literally just investing and blindly believing someone is going to do what they say, and that person never meets those targets that they say they're going to meet and the deadlines that they say they are going to meet them. So those of you who are invested in Tesla, have more power to you. I hope you guys make lots of money trading or investing in the company. But I've been in the company before, and that was before I became a fundamental investor, and now that is not a stock that I am willing to touch. That being said, I did want to talk about DraftKings. Now you say, Claude, how could you have such a negative view on Tesla, but you're willing to invest in a company like DraftKings? Well, my background is in the casino industry, and I understand that the house always wins, and I believe that the competition that has from Kalshi and these other prediction market platforms, I believe it's overblown, and what is done to shares of DraftKings is actually pretty ridiculous. So I've been accumulating shares the past month or so. As you can see, Shares are down 21% for the past month. And I've been talking about this, but if you're your first time listening to my videos and you're not aware of the situation, so DraftKings, they have licenses in specific states that are they're allowing sports betting, right? Not every state allows that. But these prediction markets like Kalshi, which is partnership with Robinhood, you can bet on sports essentially not exactly the same way you can bet on sports with the sports book. When you bet with the sports book, you're actually betting against the house. Where you're betting against these prediction markets, it's really just it's markets, and you're not betting against somebody. You're trading, or you can use it as a hedge, or you can use it as a prediction tool to wager on something, but the money flows back and forth. You're not betting against the house. You're wagering against other users and what they believe is going to be an outcome of a specific event. And so what's been really dicey, first these rolled out. It became popular during the election for Trump and Kamala Harris. And it went from there, and they rolled out sports. Now, the difference between these Kalshis, these prediction markets, and event contracts, they are federally regulated, opposed to state by state where you have to get licenses. Okay, so they're allowed to essentially operate in all 50 states, right, without having licenses, and they're putting out products, sports betting products, that are comparable and have better odds than the actual sports books do. So that's what's really killing DraftKings' FanDuel stocks, more so DraftKings and FanDuel. But to combat that, DraftKings has purchased or acquired Railbird, and they're going to launch DraftKings predictions in the coming months. Now, I don't believe that is going to be sports, at least not from the beginning, from the reports that I've read. They won't have sports. They'll keep that on their, their traditional online sports books. But they said they might roll out sports betting in the future, but it's kind of tricky because they don't want to tick off the tribes and the states where they have licensed and regulated online gaming. And so they're probably not going to offer sports prediction contracts in those states, but maybe in the future in a state like California or Texas that doesn't have legalized betting in the state, maybe they'll, on this DraftKings predictions, they'll be able to do it in those states and get some of that business. And so it's almost like an offensive play by acquiring, but also a defensive play as well. They're going off offense and saying, well, if you guys can do it, we're going to do this too. But we're also being defensive and saying, all right, we'll put our feet in the water. We'll dip in, we'll play around in this space a little bit and see where it goes there. So I bought an option contract, and that thing was up 50% today. And we have 7 contracts on that specific play. So I'm looking forward to that one. We also purchased just under 200 shares in the company long term. And so we just one of those plays. We did our research, and we're fundamental investors. Is it the most fundamentally sound company? No. I believe some quarters are actually running negative. They're not profitable. But I believe in the future, once they roll out more states and we have more regulation and more understanding of what the playing field is actually going to be in the future, these stocks are no-brainers. As long as the economy is good, consumers are continuing to spend, wages are allowing people to, pay their bills and also have disposable income. DraftKings sports is big business, and it's not going anywhere. A couple other companies, we did buy a couple shares of Robinhood. We like Robinhood long term at 125 or below shares. 120 would be even better, but we got in at 125 today. Just added on to some of the shares that we have. A little less than 100 shares there, but hopefully we'll get to 100 shares and hold those long term. And that'll pretty much do it for the day, guys. Let me know if you have invested in any companies and earnings report they beat on their earnings, but their share price performance was kind of the opposite of what you were expecting. Make sure you guys take a zoom out picture. Don't it's a volatile market right now, but remember, we were supposed to get a lot of volatility or a down market in September. We didn't get that. September was pretty strong. So October, we're going through it right now. We'll further on throughout October and heading into November, we'll get into earnings seasons, and those big tech companies will start reporting next week. If those big tech companies are continuing to do well, putting good earnings, and they actually have good response to their earnings, that should put the market higher, and we should have new highs here coming into the end of the year. That's my thesis. I think the leaders all year around are probably going to continue to lead, and hopefully companies that have not performed that well as of late or year round, like your Apple just now starting to catch fire, Amazon gets back in play, Meta gets back in play, Microsoft comes back and has a strong quarter, which it probably will. Your companies like your CrowdStrike, Robinhood again, and even Netflix gets back on track, and we can push these markets higher. The last thing I want to leave with you, if you are someone who's new and you wanted to invest in tech companies, but you're not really comfortable with investing in companies individually, the QQQ, $600, it hit that 600 level today. $600 is a great place to buy. It hit 599.74 and bounced off of that, and it went up right back up to 605. If you can get at 600 or 605 right here, hold these long term. This is a great way to play the tech sector, and I'll show you a little bit more. So you'll have exposure to NVIDIA. NVIDIA is the highest weighted in this fund, and you get it's heavily weighted in tech, but it also has some of like tech adjacent or non-tech companies in here as well. But it has all your favorites: NVIDIA, Microsoft, Apple, Broadcom, Amazon, Tesla, Meta, Google, and Netflix. Those are your top players, your top 10 players in this ETF. And I think it's a great way for you guys to get dip your toes into the market. And VOO as well. Anywhere around $600. Today hit 609.83. Start just adding shares here once they get a little bit of a pullback. Just don't go crazy if you're going to invest. Say if you had $5,000 to invest, right? Don't put all $5,000 in right now. Buy it in increments. Put $1,000 down here. If it dips a little bit, buy a little bit more. If it dips a little bit more, buy a little bit more. Just be careful. You don't want to catch a falling knife, and you're adding, and then you run out of chips. So just have a plan, space it out. Don't go too crazy, not all in at once, unless we have like this big market correction, everything, goes down like 10%, and then we see it recovers and start heading back up. That's your time where you want to put in, $2,500, $3,000 at that time. And then if it falls a little bit more, start adding on. You always want to buy it at a discount. Last thing we want to do is buy things at the top, because imagine if you bought Vertiv today at the open of 182, right? You would have saw your money just immediately get snatched up, right? So don't buy at the high. Wait for a pullback. Do your research. Join the Patreon. Join for free or join for $10 per month and really get that information to really push your portfolios forward. You can join a great community. We got folks that are in there calling out great companies. Like I said, Vertiv is up over 100% over the time that Ant told me to invest in the company, and said this is a great company that's partnership with NVIDIA. So enjoy the rest of your evening. Enjoy some NBA this evening. Have a wonderful night. I'll see you guys tomorrow.